In this video, I will explain you a simple trading strategy, step by step, that you can start using today, so you don't have to miss any big moves never again. This trading strategy will also allow to grow your trading portfolio much faster with profitable risk-reward setups. My name is Apollo. If you like this type of content, please subscribe to the channel. Now, let's jump into the charts. Here we are looking at Ethereum on the Coinbase chart on the 4-hour time frame. Step 1 is to identify your horizontal channels. After this big increase in price here, we see this correction. So now we can actually draw our first channel. Where we draw it from is from the wick. In the beginning we do it from the wick, it makes it more easy. After you can adjust your channel if we have more data. So I draw already the first channel here from this wick low and then this key level. This level is actually important because if we can break this level and find support above it, we can see higher prices. So that's the key level to break. So here you see the first parallel horizontal channel, and how you can trade this channel is actually every time the price touch here or come above and re-enter the channel, you can set up a short trade with a stop loss above it. So for example, I take here the trading tool. We set here our entry, take profit, and then our stop loss, for example, here from the next high. Do it like this. And you can see we have a 5.5 risk reward ratio. So this is a really good trade that you can take. Now the price came down, went back above it. You're still in the trade, not stopped out, and you can take the profit. Now there are different kinds of setups for taking profit. This I will explain you in a later video, but let's keep it simple this time. So we enter, when we at the top of the channel, we enter a short, we take profit on the bottom of the channel. So you can also do it vice versa. On the bottom we look for longs, take profits on the tops. Let's have a look at the next channel. We have a big move down, and here we make our new channel from the wick till the key level. So what you can see, price came down, hit the key level. So first of all, we can say, okay, we make the short position again from our level here to the bottom of this channel, and we look at the risk reward ratio 4.5. Great. So if we take this channel, you can see it came back to retest the middle of the channel. So you could put your stop loss just above this line because you have some confluence on this price level in this case. Sometimes there can be a weekly, a daily level, a monthly level that you can use as resistance. Now, the next channel in this case is over here. So you have this big move up. You can draw it from the wick high or the candle close. You have to look a little bit what works. In this case, for example, we take the wick high, see the price coming down with the long wick here, made like a swing failure, try to break out. You open your short here with your stop loss above. Sometimes it works, sometimes it doesn't, but most of the times the price will go sideways more than it will break out. So you will have more opportunities to trade a local range than breakouts. Now, the title says never miss a big trade again. So you see this big move here from the high to the low. This is 23%. Yeah, but you could say we take profit here. What you do is actually you don't close your full position. You take profits, but you not close the full position. And the rest you leave in your trade. Therefore, it's also the best way that you have two accounts to trade with, because like a local range can become like, instead of a day trade or an intra-day trade, it can become a swing trade. For example, here. So in this case here, we take a long position from the bottom from the channel, and we have say we put a stop loss like this. In this case, we have a 5-to-1 risk-reward ratio. But if you close here on the top of your channel, where you normally take your profit, and you close your full position, then you miss out all those gains up there. So we take profits, we leave 20% on the table, 10% on the table, depending on how your risk reward is. Now, one of the benefits is by doing this is also your trade is still open with your entry here. So if the price finds a new higher low, you can add on your position again, and you still have a nice entry, much lower than 99% of the other traders who just open a new entry here. This way, you will never miss big trades. You will always have a really nice entry. One more thing I can explain you here. So when the price goes outside the channel, for example, here, we have this wick down, you come back up, but you see the price came down again. So if the price action goes for a long time sideways, and you have already a wick under the channel, you can draw a horizontal line from there. The price likes to come back down and take the liquidity under the previous wicks. This is also called a liquidity grab, where the price can take the liquidity where many people put their stop losses. So there's an aggressive way to make your entry. You can wait for the price to do a liquidity grab, and then, for example, put your long at the swing failure pattern. You have the liquidity grab, and when the price comes back in, you can open your long position. Now, the price can still reject here on the bottom of the channel, but your risk reward is really good. If the price re-enters the channel and hold it, we can see the middle of the channel and then the top of the channel as the next target. So now let's have a look on the bigger picture, the weekly chart, and we draw a bigger channel. In this case, channel close from the weekly. Then we go back to the daily, and then you can see very well that you can trade also these bigger swing trades. So now we can see a weekly channel here. From this channel, you can prepare yourself for making like a swing trade. Here down, you see we had like a swing failure pattern from the low from the wick here. So we could make an entry here, but you can also make a conservative entry on the parallel channel itself when the price actually came back in here and then find support on it. So what we could do here, we put a long position here for a possible swing trade. Stop loss under the wick there, because they grabbed some liquidity already, and then you can actually target the top of the range. In this way, you also see that the big moves, you have really nice entries that you can make with this trading setup. If you have any questions, please leave it in the comments under the video. Don't forget to subscribe, and I'll see you in the next video. Bye-bye.